nation's stocks opened lower this morning after Wall Street's losses yesterday. It was because a warning from the bond markets triggered fears that a recession could be looming. Yesterday's 800-point loss on the Dow was the biggest one-day drop since October, and a lot of investors are worried. Money editor John Delano spoke with a local expert and takes a look at the impact.
For anyone with retirement funds in the stock market, it's pretty hard not to be nervous, even if financial advisors say, just hang in there.
When you see your portfolio sort of disappearing before your eyes, then that becomes very difficult to hang in there.
I haven't looked at my 401k.
That's sort of the best thing to do. Don't look at it for a while.
Jay Sukit spent 24 years on Wall Street with companies like Salomon Brothers, E.F. Hutton, and Smith Barney. Sukit says the stock market does crazy things for silly reasons.
In the short run, it's very irrational. It's almost always an overreaction, especially to the downside. I mean, we've seen this going back for at least 2 years now, where any little piece of bad news tends to trigger a lot of selling. So it looks like, the market kind of creeps up like a stair step, like an escalator. And then when some kind of bad news comes out, whatever it might be, the market goes down like an elevator.
That happened on Wednesday when the Dow dropped 800 points because interest paid on a 2-year bond note slightly and temporarily exceeded interest paid on a 10-year note.
And many people in the market interpret this as a harbinger of a potential recession.
Sukit says sell-offs are exacerbated by computerized trading that reacts to numbers, not common sense. Another problem? ETFs, or exchange-traded funds.
Instead of trying to trade like 500 stocks in the S&P 500, they can literally trade the entire S&P 500 in one of these exchange-traded funds.
And then there are the traders, not investors, who want the market to crash to make millions of dollars.
They make money if the market's going up or if the market's going down. Because what they're doing is they're selling short. They're selling something they don't own with the idea that they're going to buy it back later at a lower price. So between the price they sold it at and the price they buy it back, that's all profit to them.
For the rest of us, Sukit says, remember,
the market usually comes back to its old highs,
but never as quickly as we'd like. John Delano, KDKA News.